It's a big day in the commodities markets. We are seeing some wild swings. Let's kick off with oil. Now, at one point today, oil traded at near its highest in 5 months. And you can see it is still up substantially, more than 3% in U.S. trading. The big fear right now is that global supplies could be disrupted if the Americans launch fresh attacks on Iran, which is a significant crude producer within OPEC. Brent futures, Brent, the world global oil contract, topped $70. And you can see there, West Texas Intermediate trading above $65 US. There's been a sharp climb over the past few sessions. Brent was on track at one point to hit its highest since July of last year. Wow, since late July of 2025. WTI near its highest at one point since September 26th of last year. Apparently, according to Reuters, US President Donald Trump is considering options to deal with Iran that include targeted attacks on security forces and leaders. And according to sources who talk to Reuters, the plan here is to inspire protesters against the regime in Tehran, although Israeli and Arab nations saying, no, air power is not going to topple those clerical leaders in Tehran. Now, another factor that's been helping oil over the past few sessions is weakness in the US dollar. It's trading against a basket of world currencies at the weakest since early 2022, partly because of unpredictability in Washington and the question of how independent the Federal Reserve will be. And generally, when the US dollar is weak, it boosts commodities, including oil, because they're denominated globally in US dollars. There's a look at metals. There's been some wild trading there as well. Gold, you can see, actually pulling back right now. And yep, you can see after its huge run that continued into this morning, it has now pulled back, but it's still near record highs. Bloomberg talked to Phil Striebel, frequent guest on our show, chief market strategist at Blue Line Futures, and he said, it just seems like we've hit some peak euphoria. Gold soaring this year with geopolitical tensions and worries about the independence of the Fed. And as of today, gold had climbed more than 20% just in January. Another gold market watcher talking to Bloomberg said, given the frothiness in markets and the dominance of flows over fundamentals, it didn't take much for a correction. Copper also seeing some wild trading. Look at that, the spike in copper. There was a massive wave of buying from Chinese speculators, and it was one of the biggest moves in copper's history. At one point, we did see prices jumping above $14,500 US a ton in London to hit a new record high. And then we saw a sharp pullback. A former trader and a mining executive at Trafigura Group, who talked to Bloomberg, Mark Thompson, saying, you wait a lifetime for markets like this. He claimed, we are one supply disruption away from $20,000 US for a ton for copper. Here's some other resource stocks and stories we're watching today. Vizsla Silver down sharply. Canadian miners said 10 individuals were taken from a site in Mexico. That currently under investigation. Some operations near the site temporarily suspended. Shares in First Quantum trading higher. Bloomberg said the Canadian miners looking to sell its copper and zinc mine in Turkey. It's one of Turkey's biggest underground operations. And according to the report, First Quantum started the sales process this month. The site being valued at about $400 million US. And shares in Caterpillar, big maker of farm and mining construction equipment, higher today. It reported profit and revenue in its latest quarter that topped estimates. In this case, though, driven by sales of power generation equipment for AI data centers. And Caterpillar's power and energy segment, now its largest and fastest growing operation. There was a sharp drop, though, in profit from its traditional business of selling heavy-duty machinery to construction and resource industries. Let's get more on gold. Gold hitting a record high this morning, topping 5,400, but then giving up some of those gains. Mike McGlone, senior commodities strategist at Bloomberg Intelligence, joins us. Mike, in some ways, it seems like it's stating the obvious that gold would fall, perhaps temporarily, after such a run-up.
Well, exactly, Andrew. And what you quoted earlier from the mining executive, you wait a lifetime for things like this. And for what happened with silver today, it got to a high near 120, and right now it's around 113. It could easily correct 50%, go to 60,000, and still be above the old highs. And I think that's what's going to happen this year, particularly in silver. It's the devil's metal, and we always bring on more supply when prices rise that high. But I really appreciate the foundation you set for all commodities. There's a good reason for this to happen. But that doesn't matter now. Once you get prices this high and you get people jumping on board, the whole metals market feels to me very similar to where cryptos felt like last year. Put in a high on euphoria, and now they're still down from those levels.
That's interesting, yeah. Maybe we could look at a 1 year, maybe for Bitcoin as an illustration. It is interesting that speculators seem to be driving these metals okay. The fundamentals be damned.
Well, certainly. Well, there's fundamental reasons, but you get into very clear bull market extremes. And one key example for silver is every single week this year, there's been outflows in silver's ETFs. So that's supply coming on. They're not jumping on board. And that's also an example, I think, of prudent selling into a parabolic market. And these kind of rallies typically put in highs that can last for years.
That's it. Sorry. So this rally is not necessarily over. You say this could last for a substantial time, at least these prices in these metals?
No, I think we're near the end of the bull market. Some of the cryptos last year, and I think the highs, maybe even today in silver, could last for years. If history is a guide, the key thing I point out, there's supply coming on from ETFs. And that's a big difference from the last time silver rallied at such high velocity. So this is one of the... Against a 60-month moving average, this is almost the best move ever compared to that peak in 1980, which was distorted by the Hunt brothers.
Oh, yeah.
But back then, we didn't have ETFs. Right now, there's about 840 million ounces sitting in silver ETFs. That's a year's worth of annual supply, and it's started to be pushed into the market.
That's interesting. So the ETFs help drive silver up, and that could turn into a big bearish factor.
Yeah, well, it's just a classic sign of a peak, I think, in markets. Also, the key thing that happened this week is shocking. Silver reached its highest ever versus crude oil, its highest ever versus copper, and it's near, if you measure the whole commodity market near silver, in terms of silver, it's about the lowest since 1980. So it's very extreme. It can easily drop 20, 30% in a heartbeat and still be expensive.
Unbelievable story, though, Mike. Thank you very much indeed. Leave us with a final thought, though. Would you be inclined to put speculative money into any of these metals right now? Money you were prepared to lose?
No.
Okay.
The final thought is we've never had a high velocity rally akin to this in silver and gold, with stock market volatility, crude oil, and volatility and inflation staying so low. So I think what's going to mean is we're just going to have a pickup in stock market volatility.
Mike, thank you very much indeed. Mike McGlone, senior commodity strategist at Bloomberg Intelligence. Up next, we are going to focus on oil as investors weigh the risk of forthcoming U.S. attacks on Iran. We'll be right back. There we have it, oil, you can see higher. Let's have a look at a 1 week chart for oil, because apparently the catalyst for today's gains, and they have been rapid over the past few sessions, is speculation that US President Donald Trump will launch some kind of attack on Iran. to bolster the morale of protesters against the regime. Let's get more from Reid Ianson, economist at Kepler. Reid, great to talk to you and thanks for joining us. I know it's a very hard situation to read. From what you're seeing, is it likely the Americans will launch some kind of air attacks?
I'm not going to pretend I know the answer to that question, but I think it is interesting to note that, if you look at the oil price, you look at the broader oil market, we came into this year with real concerns about, an oversupply situation. We had this long-term, multi-month downtrend in oil prices, and that has definitely reversed through the month of January. You see Brent pushing towards that 70 level on concerns of Iran strikes. And so I think if you're trying to trade this market right now, you definitely need to be nimble and just be careful because you could see something happen in Iran. We'll see.
Right. So it sounds like we're looking at some of the points. You do still see supply outpacing demand by quite a lot this year. The broader metals trade bullishness may also, of course, be spilling over to oil. You do see Brent, which briefly topped $70 today or over the past 24 hours, slipping back towards $62 by this spring. So I think from that, I take it you see the fundamental backdrop for oil still fairly gloomy in terms of a surplus supply.
Yeah, indeed. Obviously, the geopolitical risk factor has driven, alongside maybe some rotation into oil, given this broader commodities bullishness, has helped to drive the price higher in recent weeks. But we think that fundamental oversupply will re-enter kind of the equation here over the next couple of months. And we see Brent averaging out closer to 62 again by April.
Okay, because it did top 70 briefly there. Can we switch over to gold? Now, you're making a call for the end of the decade, so you're giving yourself a bit of elbow room there, but you see it's plausible that gold gets to $10,000 US an ounce by 2030.
Yeah, we think that, the debasement trade is clearly there. Obviously, it's our view. Gold is finding this bullishness because of concerns around fiat debasement, fiscal concerns. You just look at the U.S., we're running budget deficits now of 5 to 6% of GDP, despite the fact that despite the fact that the economy is doing pretty well. And I think this is really, pushing folks to look for alternative hedges. And gold is a perfect example of this. And so we think that over the next, half a decade, this concern about fiat debasement will remain in place. And it is we have a long-term bullish outlook for gold. Of course, in the short term here, we could see a bit of selling pressure. This move higher has been parabolic. But I think over the long run, we remain constructive on gold.
Yeah, it's interesting. And of course, gold correcting today. Do you think that is kind of a normal thing after a spectacular run up in any commodity like this?
Yeah, of course, it's normal. You can't keep going higher forever. And I mean, man, even just over the last 7 days, as of yesterday, we were pushing 15% gain. I mean, it's still up 10% today in a week. Those are crazy numbers. So, of course, it's to be expected to see a pullback here. We'd advise look for opportunities to add long exposure as, this long-term bullish scenario likely continues through the course of this year.
Yeah, and I mean, obviously gold being helped by tensions between Washington and Iran. President Trump saying yesterday a massive armada headed towards Iran with great power, enthusiasm, and purpose. He does like to embroider things, but obviously a serious business. And he seems to be focused on Iran's nuclear program here, according to ABC News, rather than just supporting the protesters.
Yeah, indeed. We'll have to see what the Trump administrations decide they want to do. Of course, as you mentioned, that plays into this gold trade as well, right? We've seen a big increase in geopolitical uncertainty globally. I mean, man, just 3 weeks ago, we were talking Venezuela, right? And now we're here on Iran. And so I think that this is a big driver of that gold price as well. And of course, we will have to see what happens with these Iranian strikes. But of course, a clear geopolitical premium at play right now.
Incredible, incredible volatility. Reid, before we let you go, we've only got about 30 seconds. Do you get the feeling that a bunch of players who wouldn't normally be in the commodity markets are piling in, particularly in the metals, speculators, I mean?
Yeah, last year it was all about the AI trade, and I think that continues this year, but the focus now is on how are we going to get the materials to build all this stuff that we need to build, right? And so I think the focus is definitely shifting to we need more copper, we need more silver to meet the demands of this AI build out.
I read today that buyers of fancy PCs for gaming and stuff, they're going to be paying thousands more because the AI gang are gobbling up all the fancy chips. Reid, thank you very much indeed for joining us.
Thanks.
Reid Ianson, economist at Kepler. Coming up, we're going to stick with gold. OceanaGold was up about threefold last year. We'll hear from the CEO and learn more about the company's growth plans. So as I mentioned, OceanaGold shares soaring threefold last year. A lot of gold miners were up, of course. Let's find out what drove the performance and about growth plans for this year and beyond. We're joined by Gerard Bond, President and CEO of OceanaGold. Gerard, great to see you.
Well, thank you for having me on the show. Great to see you as well.
The Desjardins started covering you last November, and they said that mine in South Carolina is about half of your net asset value. Tell us about that one. Is that your biggest producer?
It is our largest producer, and in 2026, it's also going to be our primary source of growth. We've been investing in both the underground mine and a big waste removal campaign in the open pit, and that's allowed us to get a really good growth profile at that mine going forward.
And I think I remember you telling me that South Carolina is interesting. It was the site of the first gold rush in U.S. history more than a century ago.
I believe that to be the case. In fact, it's 200 years ago that I think gold was discovered around Charlotte, and the gold's been dug and explored around the Hale gold mine for around just under 200 years. I think the 200-year anniversary is in 2028.
And you've got, what kind of life do you have at Hale? How long will the mine last?
Yeah, well, depending on exploration success, it could last longer. But we're putting out a technical report at the end of March this year. But I think we had a life until 2033, 2034, based on the previous technical report. And obviously, we're looking to, with exploration success, which we've been having there, extend that. And that will be reflected in this technical report or further technical reports as we continue to explore.
And what do you think will be the all-in cost per ounce, roughly, at Hale?
Well, I mean, our guidance for this year was around $2,000 an ounce. We're yet to put our guidance for 2026. So when I said the $2,000 an ounce was what it was for 2025, our guidance for 2026 will go out in about 3 weeks. But because we have substantially improved access to the open pit fresh ore, and our level of waste removal is a little bit lower, we have communicated to shareholders that we expect that all-in sustaining cost to go down. And given that the gold price has risen so substantially from what it was in 2025, that means that Hale is going to generate exceptionally strong free cash flow.
Yeah, because I think you had some troubles last year at Hale that I think you're hoping will not be repeated.
Well, I wouldn't say troubles. There are always challenges in gold mining.
Yes.
It actually had it was on track to deliver its gold production guidance, so it's in good shape.
Okay. And just give me, psychologically, what's it like being you these days, running a gold company with the price of bullion above $5,000 US?
Look, I think it's very enjoyable. I'd rather be in a business that makes money than that than doesn't make money. We're fortunate we have 4 producing assets, all in a good production phase. We have gold production growth that is very near term, and we have near and longer dated options to grow the business further. We're generating fabulous cash flows. We're able to, increase our dividends. We're able to buy back shares. We're able to reward shareholders with, as you said at the beginning, really strong shareholder returns. So it's about as good as it gets, I suspect.
And I believe you're an Aussie. You also have an operation in New Zealand, including the biggest gold company in New Zealand.
Yeah, we actually have 2 operations in New Zealand. The company's heritage was the Macraes gold mine, and it had its 35th birthday in March 2025. And so that's the genesis of the company. We have 2 operating mines there. The other mine is the Waihi mine. It's been operating for 100+ years in one form or another. But late last year, we got the permit to access and develop a major project 10 kilometres to the north called Wharekirauponga, which is really exciting. It's one of the best undeveloped gold mines in the world today.
You yourself, you're a finance guy. You were a CFO at Newcrest Mining. I guess that was you left January 2022. I guess that was prior to the takeover by Newmont. So what do you do as a finance expert when you've just got cash piling up? I guess it is a dilemma. You want to reward shareholders, but I guess you're looking out for opportunities too.
Well, we are. I mean, one of the greatest opportunities sits in and around our existing mines. We have a tremendous track record of exploration success. We have a wonderful land package, and we have great people who now, with the cash flows that we have, we can fund that continued investment in exploration, which is the greatest way to make or create value in the gold industry. But with these kind of margins, we're able to invest in plant and mobile equipment integrity to make sure that the business runs more days per year, more reliably, because investors want a reliable business. And then, of course, we're able to return capital to shareholders. And that's what people ultimately want, to be able to, get a dividend, see the share price rise. And I think we've so far done a great job in doing that.
And the yield on the stock, not huge. I'm seeing only about 0.3%. We're tight for time, but do you see yourself increasing it materially, the dividend?
Well, I mean, that will be something for our February results. But, we're primarily, we're very much focused on shareholder returns. I think it's going to be a very good choice for the board to have. But we are looking at all options for returning capital to shareholders. We doubled it last year. And with these prices and the outlook for growth in the year coming, wait and see.
We've got only 10 seconds. Do Australians still say things are bonzer when they're really good?
Oh, we say that and many other adjectives to describe what's fabulous. Yes, I get reminded of my Australianisms many times a day by my Canadian colleagues.
Thank you. The Australians have enriched the language. Okay, that's the CEO of OceanaGold. You've got the close coming up next.